Hey, this is Matt from InvestiQuant. Today is Friday, July 31st, 2020. And with today being July 31st, that is the last trading day of the month. So that is a quick study that we can run here and discover, and I am going to do just that for you guys this morning. We're going to be looking at all four instruments, and we are going to look at what has happened historically when you gap up on the last trading day of the month in a strong market. So yesterday we had quite a bit of strength come in throughout the day, followed up by some earnings that came out at the close, which popped the market even higher. So we have seen a lot of strength over the last 24 hours or so. And I'm going to put us in a stronger market and take a look at what that has led to on the last trading day of the month. So I've got all four instruments selected here. The setup is entering long at the open of regular trading hours. It will exit at the close of regular trading hours, 4:15 p.m. Eastern Time. The opening direction we're going to use is simply gapping up. And then we are going to go into indicators and define our stronger market as above a 10 and above a 200-day moving average. So that will put us in a bullish environment. And then lastly, I can go into the calendar section and I can select the unique day that it is the last trading day of the month. So let me select that and hit view results. And here we go. So these are the results of going long at the open, 9:30 a.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when gapping up on the last trading day of the month and being above a 10 and 200-day moving average. So last trading day of the month, gapping up in a strong market. Historically, this has happened 46 times in the ES dating back to 2003. NASDAQ has had a few more samples, up to 56 here. YM 45 and Russell 47. So decent sample size across all four instruments. And looking at the win rates, you will notice they are weak. It looks like they are all coming in somewhere on average around 40%. ES is the weakest at about 36, NASDAQ the strongest at 43, and then YM and Russell both sitting right at 40%. So historically, gapping up in a strong market on the last trading day of the month has had a weak bias to it. It has closed below the opening print more often than not. Now, this is just looking at gapping up on the last trading day of the month. We do have it in a bullish environment, but we don't have anything like the price action that we saw yesterday added to this. That, of course, is something that you can do within the price pattern section. And if you do look at adding some more context to it, you probably want to get rid of, say, the 10-day moving average. Just use above a 200. That way you can pick up a few more samples while adding some additional price patterns to it to really dig into today's context. But this is one clean way of doing it, and historically it has leaned a little bit to the weak side, the bearish side for the day. So hopefully you found that interesting. Good luck today, and we will see you next time.